Everyone is obsessed with the S&P 500 right now, but here's something that most investors are completely overlooking. Some of the best performing stock markets in recent years haven't been driven by AI at all and are not even in the United States. Here are 4 countries that have been quietly transforming their economies and the ETFs that you can buy to invest in these regions. First up, we have South Korea. Most people think that Korea's stock market has only surged because of AI, and while companies like Samsung have definitely benefited from the AI boom, that is only half of the Korea story. For years, Korean companies have traded at a discount because of less than great corporate governance and low shareholder returns. But now the government has actually introduced reforms that are encouraging companies to increase dividends, to buy back shares, and to focus on creating value for investors. So you're not just investing in technology, you're investing in a country that is trying to rewrite how its biggest businesses operate. Next up, we have Japan. Japan has been written off for decades, but today it's undergoing one of the biggest corporate transformations in its history. Companies like Toyota, Mitsubishi, and Sony are under increasing pressure to use their cash more efficiently, reward their shareholders, and improve profitability. Even Warren Buffett has invested billions into Japan because he believes many of these companies are still undervalued. Then there's Mexico. This is not an AI story at all, it's a manufacturing story. Because of increasing tensions between the US and China, a lot of companies are moving their production closer to America. This is a trend known as nearshoring. Businesses like Grupo Aeroportuario del Pacífico, which operates major airports, and Cemex, one of the world's biggest cement producers, are benefiting from increased investment, construction, and trade as manufacturers really expand across all of Mexico. Finally, we have Greece. 15 years ago, Greece was at the center of Europe's debt crisis. Today, it's become one of Europe's biggest turnaround stories. Banks such as the National Bank of Greece and Eurobank have recovered dramatically after years of restructuring, and tourism companies and infrastructure businesses are having record visitor numbers and renewed foreign investment. So what is the lesson here? The biggest investment opportunities don't always come from chasing the latest AI stock. Sometimes they come from countries that are fixing their economies, improving their businesses, and attracting investors before the rest of the world starts paying attention. 4 ETFs that you can buy today that track these markets are CSKR. This is the iShares MSCI Korea. It's up 74% in the past year. VJPB, the Vanguard FTSE Japan, is up 27%. CMX1, the iShares MSCI Mexico, is up 29% in the last year. And GREK, the Global X MSCI Greece, is up 26% in the last year. As always, this is not financial advice, but it is a friendly reminder that diversification isn't just about buying different company stocks, it's about understanding different economic stories that are playing out and expanding your portfolio across different regions and sectors.